Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Mastech, which is a potential champion and can do extremely well over the next couple of years. So let's understand about the business and let's understand about the valuations. Let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I am not in favor or against any company that I talk about. Before I talk about Mastech, here's a small request. Kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. Also, and if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join the WhatsApp membership. You need to email me. Now about the company, established in 1982, Mastech provides digital services all across the board and provides digital solutions, enterprise services and automation processes. It acquired Evosys to fuel its digital growth from 2020 onwards. Major businesses are in agile consulting, application support and maintenance, digital commerce, application development, business intelligence, and assurance in testing. The market cap of the company is 6,000 crore and the stock has dipped around 20% over the last few weeks. When you look at the financials, these are Q4 numbers. So numbers on the top line reduced a bit. Normally it used to give sales growth of around 25 to 30%. The sales growth was around 21%, but profit grew by around 30%, and that too on the back of giving high taxes. Otherwise the profit would have grown by around 35% or so. There is low promoter but decent institutional holding at around 18%, which is pretty good. The ROE of the company is closer to 31%, which is increasing and doing well. So return on equity is growing. Margins have decreased. So from 24% last year, the operating profit margin has dipped to around 21%, which is still decent considering the kind of you can say growth that most of the IT companies are showing. Mastech is performing pretty good. So in terms of the stock performance, it has done exceedingly well in the last 2.5 years. So if you look at since 2020 Feb March till now, just over 2 years have gone and the stock has gone up 10-11x and then has reduced. So from around 30-35 rupees, the stock has gone to 3600 and has reduced to 1800 in recent times. So it dipped 50%. And in fact the last 20% fall came in the last 2 to 3 weeks. It had been consolidating for a few months and then showed this decline, so it is extremely bearish, but these are the times to accumulate from a long-term point of view, and that's why I'm bringing this video. It has been delivering growth on all fronts and the growth levels have been good considering the industry performance. The performance of the company has been pretty good. You need to understand that there are recessionary pressures in the UK, there are recessionary pressures in US. So the major business comes from United Kingdom, and so there will be an effect of it. Probably everything is getting priced in around this 1700-1800 band, and probably 2 quarter onwards things will start looking up, and we all know when things really get going, then how these small cap companies get re-rated, and then because of lower liquidity the stock can go up 8-10% in a day, and likewise can go up in a jiffy towards the levels that I'll discuss later on. But yes, there will be pressure on the numbers, there will be pressure on the stock at least for the next 1 quarter or so, although results have been pretty strong and getting a number of large orders. The company has been doing well on orders front as well. And remember, valuations have become even more attractive. I'll talk about the valuations in the next slide, but it has become even more attractive considering it's a mid-cap company. The valuations look very good. So why the surge has taken place over the last 2 years? First of all, we need to understand this because this stock was a 30-40 rupees stock just about 2-3 years back. So operational numbers have more than doubled over the last 2-3 years. Operating profit margin from 14%, as I said, has gone up to 21%. It went to 24%, now 21%. That's a growth of 50%, not just you can say 50 basis points or 100 basis points. That's a tremendous growth of 700 basis points over 2.5 years. Technology is in fashion big time, and this is something that I believe for this decade, at least for the next 6 7 years, will be here to stay. Even if the tech index is down 30 35% from the top, I think this is a huge opportunity in major tech stocks for somebody to make money. Best of the best mid caps and small caps, and even large caps are coming at very attractive levels. Something like a TCS coming uh, at a discount of around at least 30% from what it should be. So things are looking very good from a 2 to 3 year perspective for major IT companies. So reasonable valuations at the start of the year, reasonable valuations over the last 2 years for the company has made this possible, that the stock went up 12x from the lows 2.5 years back. Profits have grown nearly 90%, and ROE swelled over this period of 2 to 3 years, and more clients and better order book swell the valuations even further. So what happened was, at 3600 the stock was trading at around 40 42 times earnings, whatever earnings that was coming through. And now if we look at 2 year forward earning, I'll let you know it's only trading at 13 14 times. So it has come to very interesting levels now, and that is why bringing this up for all of you. So it's a very good 2 year play. If you look at the numbers, it's expected to have an EPS of 155 rupees by FY24. FY22 it had an EPS of 98 rupees. If you take out that tax thing that they paid 29% tax versus 24%, if you take out a number of points, like they had more ESOPs, so number of shares increased, so the EPS is reduced a bit, they would have had an EPS of 115 rupees or so. But anyhow, even on 98 rupees, if they grow by 25% over the next 2 years, which I believe they should, I think the EPS should be closer to 155 rupees by FY24. At 155 rupees EPS, valuations are very attractive at 13 times earnings at around 2000 rupees. If you take 2000 rupees as the current you can say price, then it is looking extremely attractive at the moment. Order book pipeline is good, and major deals are in offering. Yes, business could slow down for 1 or 2 quarters, but over 8 or 9 quarters things are looking very good considering where the stock is. Remember, a disclaimer I want to make here is that I have the stock in my portfolio, so kindly take that with a pinch of salt, that I have it in my portfolio. But at 2000 rupees it looks like a steal. Around 1800 2000 rupees, 25% CAGR growth over the last few years has been the norm on the top and bottom line. I think this should continue, and I believe that it should trade at least 30 times, if not 40 times, then 30 times earnings by FY24, which gives us a target of 4700. So more than double the stock can be from 2000 levels. I think it could be 200 to 30%, but it looks extremely good. I think the IT index and the industry altogether in terms of the stocks would make a comeback in the next couple of years or so. So in terms of technicals, it has nosedived in the last few weeks. So we have seen that the stock was maintaining good levels around 2600 to 2800 levels. Then it broke below 2500 and went to 1800 purely on technical terms. As we know that most of the trading takes place as algo trading. So there has been massive selling below 2500. There are very good supports at 1700 1800 levels. Probably one can buy with a stop loss of 1700. That's a 15% lower, and a target of 4500 4700 in a couple of years time. So one can have a stop loss of 1700. It is close to major supports, and it is strong on long term charts. If you look at a 2 to 3 year chart, then these are very good levels for one to accumulate. The breakout is expected about 2500. It can be accumulated in this range. So one can accumulate in this range or on major decline. It may consolidate for a quarter, 2 to 3 months, but should perform well. Have only 5% exposure into such stocks. So this was a video on Mastech. Please like and subscribe my channel, hit the bell icon. Thanks a lot for watching.